Well, hello everyone. Welcome to Solomon Edwards' first installment of our subject matter expertise series. Today's feature will be on the outlook for a complicated and nuanced area within the accounting space, which is lease accounting. My name is Zach Baumstein. I'm a client relationship manager with Solomon Edwards. Today I have with me Mike Vanscoy. Mike is a director here at the firm, recently returned for a second stint with the company, couldn't get away from us. And Mike, my intro would do you no justice. So why don't you give us a little bit of insight into who you are and where your expertise lies?
Yeah, like Zach said, I'm a managing director here with the firm. Been with Solomon for about 4 years with a little bit of a blip in the middle there when I thought I would try something else and decided it wasn't better than this. Mainly, within the transaction regulatory and advisory service section of the firm, I do a lot of our technical accounting work, provide a lot of subject matter expertise to our clients on transactions. In particular, the last few years, we've spent a lot of time doing a lot of lease accounting work with the new standards, whether you're a public company, private company, or a governmental entity. We've been doing a lot of work with the new lease standards, which is what we're here to talk about today.
Awesome. Thank you, Mike. So Mike, why don't we dive right in? I think it first might be necessary to take a step back, run through just at a very high level, what exactly is lease accounting? What are some of the larger standards that companies have to follow, and why it might be a tricky function for accounting organizations?
Right, yeah. So the lease accounting that we're here to talk about now is over the last few years, all of the standard setters have introduced new lease accounting guidance that have whole-scale changed the way we used to account for and report leases. For everybody, the biggest significant change that you're going to see is all leases that you have, with very few exceptions, are going to be on the balance sheet. That's the most visible change that everyone's going to see. So whether you're a public company, a private company, or a governmental entity, all of these leases that we sort of used to enter into and we'd see costs on the income statement, we would bury all of the details in the footnotes. The difference now is that we're going to see our balance sheets reflect all the assets and liabilities associated with leases that we've never had to report before. So if you report under FASB guidance, you'll be adopting ASC 842, which public companies did as of January 1st, 2019. The international standard IFRS 16 also came into effect as of 1/1/2019, and governmental entities are subjected to GASB statement number 87, which has come into effect within this past fiscal year. So we'll talk a little bit more about some of those implementation dates and how the impact of COVID and some of the other economic environment has had on it. But in a nutshell, the biggest thing that people are going to see is that the guessing game in terms of how much you really had invested in assets and what kind of obligations you had related to leases is over for the most part. And I would say, if it's an improvement, which was the FASB's goal here, is to improve transparency on leases, is that prior to adopting these new accounting standards, all the ratings agencies, whether it's S&P, Moody's, or whatnot, would try to guess at the level of obligation or the level of debt that a company would have on its books that were hidden in, quote, hidden in some of these operating leases that were kept off balance sheet. So there was a lot of guessing, a lot of movement around there that wasn't consistent. Now, at least with the new accounting standards, in addition to putting assets and liabilities on the books, you have a robust set of disclosures, which include the rates at which you're discounting all of your lease payments. So now investors, all stakeholders really get a chance to see what that looks like.
Right. So a lot of moving parts, lots of different standards, different types of companies have to follow. And, to your point about the guessing game, it just adds a lot of confusion to the mix, I think. And it's easy to see why it can be a tricky function. So thanks for that, Mike. Now that we sort of have a better idea of, what really lease accounting is, why don't we take a look back at the past few years, and specifically with COVID. COVID has obviously impacted everything and anything, and lease accounting was definitely not spared. Tell us a little bit about those impacts.
Right. So if you're a public company and you adopted as of the 1st of January 2019, you implemented this new lease standard before the impact of COVID-19 was felt. But for private companies, most private companies weren't required to adopt until a year after public companies, and governmental entities were also following that same timeline. Once COVID hit and we had the shutdowns and people were using less of their real estate space or not utilizing some of their equipment that was being leased, they started seeing a lot of issues with asset impairments, or at least now under the new guidance, if you change the makeup of an asset, or if you're not using an asset, you have impairment issues to worry about that you never had to worry about before. With an operating lease that was off the balance sheet, you never really had to record a liability until you decided to terminate the lease, and then you would record a liability for the termination penalties or the run out. Now with the new leasing standard, you have assets on your books that are subject to the same impairment rules that a fixed asset that you purchase and put on your books is subjected to. So you started seeing companies now recognizing that, well, hey, wait a second, now we have to pick up a brand new set of assets that we never had to pick up before because of these leases. If you're a private company or a governmental entity, you got a bit of a reprieve as a result of the pandemic shutting things down, and that FASB and the GASB both delayed implementation of the lease standards for private companies and governmental entities, respectively. So the private companies now weren't required to adopt it until years that began after December of 2021. So what you're seeing now is private companies adopting as of January 1st, 2022. Governmental entities weren't required now to adopt until fiscal years that began after June 2021. So with most governmental entities' fiscal years being 6/30 year ends, last summer was the beginning of the first fiscal year when a lot of governmental entities would now have to adopt the standard. So COVID had an impact there in terms of if you had already adopted it, now you're dealing with maybe impairment issues, and another issue that you might have to deal with are modifications. Now that you have these assets and liabilities on your books, if you make any sort of change, either because you've gone to the lessor and you've negotiated new payments, or you've negotiated rent holidays, which were starting to become quite common in the summer of 2020, even to the point that the FASB had to issue additional guidance in order to give entities some relief from the new accounting standard, which would require a lot of modification accounting. So if you'd already adopted it, you kind of had to deal with the economic consequences of it. If you hadn't adopted it, you got another reprieve in terms of adopting, but now that reprieve is over. The FASB had reconsidered in November of 21 whether to delay it further, but decided not to because at some point they wanted everyone to adopt it, and they just didn't feel like it was necessary to kick it out for another year. So it sort of reminds me of when I was a kid, and I don't know how many people have this experience, but and how my brothers and I would always run to get on the bus every morning and just make it to the bus. And even if we had a snow day and we had a 2-hour delay, you would think with 2 extra hours to get ready to get on the school bus, we should be able to make it in time. But yet there we were still running down the street to catch the bus. And so now companies are going to could find themselves in the same situation here, where, yeah, you've been given this reprieve, and maybe a lot of folks thought and hoped that the FASB would provide a bit more relief and delay it even further, but they didn't. So now the reckoning is here in terms of adopting the new lease standard.
Right. Yeah, that's actually a fantastic example. And, even clients we're speaking to now, I mean, they've kicked the can down the road so many times just because they seem to think that, the delays will just continue and continue. But like you said, the day of reckoning is sort of here. So yeah, so that sort of brings us to today, and you alluded to a lot to where we sort of stand. What is really the impact of these new accounting standards? I mean, have they lessened at all given the delays?
No, not really. Because the one thing that the FASB has been and GASB and the ISB on the IFRS side have been very consistent is that they haven't gone back and tried to rewrite the rules because we're dealing with an unprecedented environment with COVID and with the economic fallout from it. Instead, they have released a lot of additional implementation guidance, things to answer some questions and maybe tweak around the edges. But the one thing they've done is they've been very consistent about holding true to this new standard and implementing it as is. And I'd say for public companies, they've had a couple of years now, but they've kicked the tires on this. They've done some reporting, and if you're in a position where you haven't adopted yet, you're running out of time. In fact, the impact hasn't lessened at all. It's probably increased for you because now you're in a race. You're in a race against time to get the implementation done before the end of this current year. And the longer that you take throughout your year, the more work that you have to do to go back and do restatements and fix everything as of the beginning of the year. from that standpoint, the impact hasn't lessened at all. But the good news is, if you're a private company, and even if you're a governmental entity, even if the standards don't relate exactly to you, you're able to go back now. You've got a few years worth of data from the public company. You've got SEC comment letters that you can read about lease accounting. You can read all of the articles and all of the subject matter experts across the board, from lease software providers to big to accounting firms, regional and Big Four, that can provide a lot of insight and a lot of war stories, if you will, about what they experienced, what they saw during implementation. So the good news is now, and I like to say plagiarism is the sincerest form of flattery, is that you can go back now and look at what everyone else has done, what they've done, what's worked, what hasn't worked, and apply that to yourself, because the public companies had to go it alone at the beginning without any sort of reference point. But if you're not at that point where you've adopted yet, you do have the ability of their hindsight.
Right. Yeah, absolutely. And again, it's the example you gave of just trying to catch the bus. There are a lot of things out there that can help you catch up that bus, and that's a great segue into my next question, which really just revolves around the technology and software aspect. Seems like a lot of companies have used and will continue to use, planning to use, just a simple Excel sheet for their lease accounting needs. And in a lot of instances, that's probably appropriate. But at what point should they consider utilizing something a bit more sophisticated, like a lease query or a visual lease? Like, what sorts of impacts can that really have for your organization?
Yeah, if you're a very small organization and you only have a handful of leases and they're not very complicated, you may get away with using a spreadsheet. Because this, if you don't have foreign currencies and you don't have anything unusual in those leases, you might be able to get away with a simple Excel model. The only thing is, like everything in Excel, it requires manual intervention. And anytime you're using inputs and you're doing things to an Excel model, you're increasing the amount of or increasing the risk of human error that can be made. If you have anything, once you start getting in the double digits in leases, or you have any sort of what I say or complicating aspects to your lease, whether you've got leases that are in foreign countries or you've got leases that are denominated in a foreign currency other than your reporting currency, and you have escalations or you have abatements, rent holidays, or build-to-suits, or all these sorts of things that can come into lease accounting, then having a software is key to your survival, really, for your mental health and the ability to report and disclose accurately. What I usually like to say is, you can use Excel to get to day one accounting, but you need lease software for day two, because you can use Excel, you can calculate all the assets, all the liabilities, you can develop amortization schedules, you can do everything to get the numbers that you need for day one to adopt it. But then day two, when you have to do all the journal entries and you have to do amortization schedules, and then down the road, if you make changes to leases, whether you're modifying them because you're upsizing, downsizing, or you're renewing, or you're doing terminations, those require completely overhauling every Excel model that you have. And Excel isn't great at consolidation unless you do a lot of manual input. So like I mentioned before, if you have leases that are in different currencies, in different jurisdictions, and you have leases with different discount rates, the lease software will do all of that work for you with minimal input from you. You're able to populate tables, you can populate databases. And what lease software gives to you that Excel doesn't either is the administrative tools that you may not have used before, or may not have thought that you needed before, with regard to lease management. This is no longer just a purchasing or accounts payable function where someone's paying the lessor once a month, and as long as we're comfortable with the amount of expense that we're recording, we weren't too concerned about it. But now that everything's on the balance sheet, we have assets, we have liabilities, and depending on what kind of lease it is, we have to map where those expenses are going. Having those tools to provide that administrative capabilities is key. Almost every lease software provides a functionality of being a document repository. And I know we found from working with a lot of clients, working with a lot of people, that just knowing where all the lease copies are is one of the hardest parts of an engagement, or part of getting into this adoption and starting to wrap your arms around your lease population. Using a lease software, populating that with all of your documents, with all of your key dates, does centralize that process for you. And it gives you the ability to remind you of key dates, so that you don't miss termination options, you don't miss extension options, purchase options, those sorts of things. And having that reporting capability at the touch of a button is priceless. So.
Right. Yeah. And I think a lot of companies as well who already have those technologies in place might not even be utilizing them to their full capabilities. So just diving into that is probably helpful. I'm sure you've had some instances of that.
Yeah. So what we found is that, we've had clients, and I've had clients I've personally worked with that said, hey, look, we just want this tool to do the lease calculations, do the reporting, do the consolidation. I don't need bells and whistles. I just need it to do this. I've got a real estate team that handles real estate leases, and I've got, an operations team that handles equipment leases. They can do the management of it. But what they found is after, so it's kind of like when they didn't realize what they had and they got a new toy and didn't realize what they could do with it, is that, okay, yeah, the accounting, the reporting, all the consolidation stuff, all the nuts and bolts that you need in order to be compliant with the new leasing standard, regardless of which standard you're on, was there. But what they found is having all the documents in one place was great. So when an auditor comes and, something simple as an auditor coming to request a copy of the lease, and it's right here, we don't have to send emails, we don't have to call people, we don't have to try to find, is this the latest signed one? Why do we have this copy of the lease and it's not signed? Who's got the signed copy? All the things that we're all familiar with that happen everywhere we work. But then even beyond that, what we found is that they've enjoyed having the ability to put key dates in there. So to do forecasting, so if you're an NFP&A, instead of trying to collect, lease information from, a dozen people across your organization, and then trying to do cash flow forecasts and trying to figure out what impact that now is going to have on your balance sheet, the lease reporting tool can be used to do forecasting. You can forecast asset and liability balances. You can forecast cash flow. You can forecast expenses, those sorts of things that are so much easier now when you have this centralized. It's beyond ASC 842 compliance. It's helping you run, your budgeting process, your forecasting process better. And it does prevent, and we'll talk probably a little bit more about some of the strategic advantages, but it allows you to have the information at your fingertips that can help you make better decisions about your leases. And that's really where the key comes in, is the lease software may require a slight investment of time up front to get it in there and get it right. And you may find that as you go along, your needs change and you tweak it and use more options than you used initially. But it really is a great tool beyond just the compliance with the new lease standard.
Yeah, another fantastic segue, Mike, because getting into the strategic business decisions is something I definitely wanted to talk about. So, there's obviously this huge component that, it's not only affecting the accounting organization, the impacts of the lease accounting standard, COVID, but really the strategic business decisions that organizations have to make. So tell us a little bit more about that relationship between the lease management and business strategy.
Yeah, so we'll start with the theme we've been harping on, is that, management may not have paid as much attention to leases other than the fixed charge that they represent coming through. But now, when you're providing financial statements, whether it's to stakeholders, to lenders, now you've got the grossed up assets and liabilities that you need to explain to others. And now people pay a lot more attention when you're putting a significant amount of assets on there. Even though you've been using these assets all of these years, now they're front and center where everyone can see them. That has an impact in terms of how you communicate that message to your stakeholders. What are we doing here? You have investors or stakeholders that may raise their hand and say, hey, I didn't realize that we were leasing this much, real estate, or we have this much tied up in equipment leases, and now you're disclosing the rates. Are these, are we getting great rates, or are these good deals? You get a lot more questions in terms of managing the expectations of readers. But also another thing that you need to think about as you're going through this is the relationship between you and your financial institution. So the lease standard could cause some issues for you in terms of debt covenants or in the amount of financing, or affect some of your key financial metrics. So it really does change the way you may look at your business and evaluate your business. And in some cases, I've worked with a few clients that had to change their bonus plans because of the new leasing standard. So depending on the way they record it, you record these assets and these current and non-current liabilities on your balance sheet, and the way you measure the lease expense through could have an impact on how you incentivize people within your organization. So again, it goes far beyond just the straight up compliance with the respective leasing standard you're adopting. But then beyond that, I talked a bit about the capabilities of having a lease software, having this sort of centralized process now beyond the way we used to just think about leases. What came out of COVID-19, say in particular, as an example, is that we saw a lot of people downsizing. We saw a lot of empty properties in 2020, and there was a lot of sky is falling sort of concern that, hey, is this going to bottom out? A lot of folks have made a lot of investments in properties or entered into 10, 15, 20-year leases on real estate in particular. And even equipment vendors were out there saying, well, hey, if this economic slowdown continues much longer, I don't have cash flow coming in from leasing out equipment. What are we going to do? And now we have, and probably I think this phrase has been banned in some circles now in some websites, but this new normal that everybody's working in, where so many more people are working remotely or working hybrid sort of arrangements now, means that there may not be the same type of demand as there were in the past for leased real estate property, for example. Although we expect 2022 to continue the rebound that we saw a bit in 2021. It's changed the dynamic. It's changed the dynamic for landlords or lessors who may have to offer different types of amenities or different types of incentives in order to convince lessees to come in and use property. If you're a lessee, if you're someone who's renting real estate or considering renting real estate, do you look at 10, 15-year leases now? Because in the past you may say, hey, this is economical, our office, these are our headquarters, or this is a key manufacturing or key distribution facility for us, and we're going to be here for a long time. Well, although we hope it's once in a lifetime, this once in a lifetime, COVID event exposed that, hey, maybe we don't want to be locked into these long-term deals. Maybe we want to be more flexible. Maybe we want shorter lease terms. Applying the rules in the new standard, and putting these things on the balance sheet, and now having to worry about having impairment or other issues that, are easy to be seen now by stakeholders when they're looking at your financial reporting, is that having the software and having the ability to understand what your terms are, how those terms impact you, gives you a chance to be more flexible. Do you want to do extensions? Do you want to do more variable rates in your leases rather than fixed terms? What do you want to do now with leasing? Leasing can be more of a strategic tool than it has been in the past. So again, it goes far beyond just being compliant from a reporting and disclosure standpoint. So.
Right. And by the way, I'm just happy you didn't say unprecedented times. I think the new norm, that's fine. Unprecedented times, that's definitely been banned. So yeah, and the flexibility component of it, I think is a huge theme. And with regulations, they happen pretty fluid. They seem pretty concrete at the moment. For the companies that are already compliant with some of these accounting standards, what are some tips or recommendations you might say to them in order to stay flexible enough to adapt to potentially the fluid regulatory environment that we've been seeing?
Yeah, so if you've already complied, if you're reporting under one of the new lease standards, then this is an opportunity now that you've had, like I said, a few years of experience and understanding the impact on it, is as you're getting into and you're making strategic decisions, you're forecasting sort of what your long-term goals or objectives are. This is the time to look at the lease property that you have, all of these right of use assets that you now have on your balance sheet, and identifying which ones are strategic, which ones should we remain more flexible as renewals come up, or as you have opportunities to either terminate or to renegotiate leases. This is a chance for you, and by using the lease reporting tool that we all hope that you get lease software, because it's the easiest way to do this. You can use that tool to do simulation analysis. You can use this tool to understand if we make these sorts of operational or strategic decisions, what can we do within our current portfolio to maximize the leverage that we have, to maximize cash flows, and to make sure that we're in the right places for the right periods of time. So if you're already there, you sort of understand, you've got, like you said, you've got all your war stories, you got your experience of what it's taken to get you here. And it may result in you making, some strategic decisions, and including, key pieces of information that you may not have included in the past. Like I said, the goal of almost everyone that reported leasing, prior to 842, and I know from, from previous lives, is that everyone wanted an operating lease because then it's off the balance sheet. And so we don't have that option anymore. So now it's going to go on the balance sheet. So it's just a matter of what is it going to look like when it's on our balance sheet, and what kind of impact is that going to have on us? So.
Right. And so what about the companies who have kicked the can down the road? They're still trying to catch the bus. What are some things you might recommend for them to, sort of jumpstart their compliance efforts?
Well, first, I'd say get a subject matter expert. Get someone, get an external resource that's had experience doing this. Come look for people like us who've been doing this with a lot of people, find those subject matter experts and those with experience that have been doing this for the last few years. There's a lot of information that we've learned. There's a lot of do's and don'ts that we've picked up on it. Because if you're deciding to go it alone, you might be okay, but what you're going to do is spend a lot of time, and take a lot of missteps while you're trying to do it. I mentioned, yeah, it's great. You can go copy and read what everyone else has done, and you can read everyone else's experience. But even if you intend to run a project yourself or think that you have enough internal resources to manage that yourself, the best advice I can give to you is to go get someone who's been through this, who's been through the process, been through the adoptions, and understands what could happen and what kind of impact it's going to have on you. And I would also caution that, again, if you're one of those clients that only have a few leases, yeah, you could probably do it and survive and do just enough. But if you have, like a lot of our clients do hundreds of leases, that's going to require quite the investment of internal resources. And if you haven't started that process yet, or even if you've just begun that process to be compliant here in 2022, you've got a lot of catching up to do and not as much time. You have less time than you have work to do. And if you're expecting your internal, accounting and reporting teams to take care of all the monthly closes and quarterly or annual closes and deal with auditors and all the other day job stuff they have, and in addition to that, do the standard, it's going to be quite difficult. Because it's not just like, the last couple of big standards the FASB is implemented with 606 and 842, the revenue recognition and the lease standards have both required quite a bit of work. And in both cases, they've substantially changed processes. This is going to change the way you lease equipment, the way you look at how you lease real estate and equipment and other assets. So I'd advise you, yes, get someone who's been through it and prepare for a lot of work. And just so you know that your internal resources may not be enough in order to do that and adequately keep the wheels running it.
Right. And, I've heard it personally myself dozens of times where clients will come to us and say, we thought we could do this on our own and we wanted to, but frankly, it's just too much work. We don't have the bandwidth to do it. So a lot of the times it just comes down to bandwidth. A lot of times it can come down to just pure experience, and bringing in an expert, like you mentioned, really just helps with that learning curve, which is great for organizations.
Yeah, because you get the benefit of all the work that we've already done. You get the benefit of bringing in an expert who's already done all of the technical accounting memos, who's done all the write-ups, who's taken people through adoptions, who's, so there's a lot of startup cost that you have when you try to enter into this sort of venture on your own from scratch. There's a lot of investment sort of startup costs, and understanding the standard. How does it apply to me? To the stuff. Bringing in someone who's been through that, who has recommendations, who has advice, and who's seen, all the good and the bad that comes with, the adoption. We've seen clients, that are very, very good and very adept and we're ready for it. And we've seen clients that, like you said, you're kind of like the people that used to come into their tax preparer at the end of the year with a box full of stuff and say, here, tell me how bad it is. And so right. we can still help you with that, but just be prepared for that.
So all this is great, my next question, you sort of touched on this throughout our time here, but as a sort of a summarizing thought, what do you think all of these factors really mean for this upcoming year in terms of the lease accounting space, whether it be, the regulatory landscape, just getting up to speed with your compliance efforts, operational focuses. It sounds like technology is a real large helper there, but also as COVID is continuing, there's chatter that COVID might be dying down. How does all that sort of wrap up into one cohesive unit moving forward into the year?
Yeah, so we all hope that COVID is dying down and takes that factor off the table.
Let's pray.
But I think what you're going to see is that as we get all the private companies and now all the governmental entities getting on board now, you'll have everyone by the end of this year will have adopted, has been required to adopt their respective new leasing standards. So I think what you're going to see then is a lot more research into what's working well, what hasn't worked right, and then that's where I think you'll see the standard setters and probably a year from now, really, you'll see the standard setters taking a step back and trying to figure out, did this go the way we thought it would? And as always, you can probably expect to see a few tweaks here or there because the private companies haven't gotten that far into it. We haven't heard as many of their concerns as we've seen on the public company side yet, because most of them have evaluated at least what they think is going to happen to them, but haven't done it yet. On the technology side, I think you're going to see a lot more people utilizing technology, and even those that we talked about that thought they could go it alone or go it with a manual process are going to find out that, hey, this doesn't work. And I think you're going to see a change in the way leasing is done, throughout industry. So I think you're going to see a change in behavior from lessors, whether it's real estate corporations that are leasing the property, and from entities that are doing these leases. I think you're going to see a change in behavior, and it's what I think the interesting thing for me to see unfold over this year, as we expect to see activity ramp up a bit, is who's got the most leverage, right? Is it the lessees who can now, because we've seen some large companies like Apple, Verizon, and Google and others that have either offered full-time remote or at least hybrid arrangements for a period of time. And in some cases, like, some of the accounting firms have offered, permanently remote positions now, which means less need for physical spaces. So who, I don't want to say who wins, but yeah, but sort of who wins economically in that environment in terms of which way do the scales tip now from leasing. But I think you're going to see a lot of changes in behavior and a lot of changes in practice in terms of way leasing transactions are structured going forward. And I think now, because, and maybe it's, I think I said earlier, the confluence of the new accounting standards and COVID really brought leases to the forefront to realize, like, wow, this is a huge financial impact on us, even if we didn't see it before. Now that it's here and we have it on the balance sheet, or even if we don't have it on the balance sheet yet, and all of a sudden we have something like a pandemic where we're not using the assets that we've been financing through leases for so long, yeah, that hurts, because that's real cash that we're not utilizing to its full potential. So I think you're going to see a lot of changes in behavior on both sides of the leasing equation.
From a goals standpoint, we talked a little bit about companies who are not compliant with current standards, companies who are. Regardless of compliance standards, I mean, what are some goals that you think organizations should start to establish now as the year moves forward?
Yeah, I think whether you've adopted yet or you haven't adopted yet, I said use this as an opportunity to clean your house. This is what we found, with a lot of companies that have already adopted it, and as we're going through some private companies that are adopting it now, is use this as an opportunity to understand what you have and whether you really need it or not. So I'd say one of the goals or objectives I would set up is, if you've already adopted, use this now. You've had a couple of years to clean. It's almost like going through and cleaning up a fixed asset register. When you hear the stories about, like, oh, we have all these assets on the books that have no value anymore, or we're not using, why do we still have them? Do the same thing with your leases. Go through this. Use this as an opportunity to clean your portfolio up, to understand where you have, and now that you have all this information, hopefully in a software, is understanding, are you putting everything, are you utilizing everything in the right places? Are you using something, underutilizing an asset somewhere, or do you have other parts of your operations that could use more of these assets? Use this as an opportunity from an operational standpoint to reallocate your resources to a place where it makes sense, and also use it as an opportunity on the accounting and reporting side to do the same thing, to clean everything up, to make sure you have all of your documentation where it needs to be, that you understand the impact of all these financial decisions that you're making, and use this as an opportunity more than anything else, is to understand what kind of future decisions are you going to make now that we know what we have, now that we know the impact of it. What are we going to do now that we wouldn't have done, say, 3 years ago, before all of these things came into play? Because these fixed charges were out there, and we had assets that we knew we were using, but it wasn't it was a big deal, but it wasn't as big a deal maybe as it is now that COVID and the lease standard have uncovered all of this for us. What are we going to use with what we know now to make better decisions going forward? So one of your goals and objectives should just be to make this part of your strategic process, is reviewing the way you look at leasing.
Well, Mike, is there anything else you'd like to touch on the topic before we sign off here?
I think I'll just end by summarizing what we said before. If you haven't started yet, get started now. Get out there, call people, get an expert, get everything ready to go, because it's going to be a mad dash to the end of the year. And if you have started, and if you have adopted the new leasing standards already, continue to utilize the tools that you've probably picked up and acquired along the way to do even more than just the straight up accounting and reporting. We might be the technical accounting guys that can come in and help you with that, but there's so much more that you can do with this now that you know.
Well, Mike, it's been a pleasure. Thank you for all your wisdom and guidance. We will be following up with Mike later this year to check in on the state of the lease accounting space and hear more of his thoughts there. So looking forward to seeing you then, Mike, and take care for now.
All right. Thank you very much.
Awesome.